Live. YouTube is now live, and
Oh,
I just sent the stock twits tweet twat.
so all of this is on, this is
It's
live
everywhere,
or
baby. We're live everywhere. We are live on the internet. And let me turn my volume down.
when do we go live?
There we go. Can you guys hear me?
I
Yeah.
can.
I can hear you.
Hi, Cookie.
Hey, bro.
How are you?
I'm doing very, very well.
Hi,
I'm
Nick.
doing very
Hi,
well.
GP. We don't really
Yeah.
have a name for this. We just wanted to get together with Cookie and have a
Mhm.
little chitty chat. So we just called it Kicking It with Cookie, and what the hell? We're just going to go with it. So we're live on YouTube right now. Nick, did you make sure you're good? You're live on the X?
Yeah, I am. Or we
Perfect.
are.
Perfect. So we're off to the races. Everything is wonderful. Hi, Cookie. It's been 6 months, February, since the last time we talked to you here on YouTube.
Yeah.
And we thought it would be a good idea. You always hold it down for the entire hour with us, throwing all kinds of charts, everything out that you have and that you know. But I think the group of
Yeah,
us
it
here
was
thought
like
it
a
might be
second.
good to talk about some psychology and just things that are happening in the market that we've seen and maybe how we trade some things. So welcome back. It's great to have you. And I don't know wherever you want to start. We'll just have this open flowing conversation.
Well, let me just say, first of all, it's awesome to be back with you guys again. Because as I said, it's been 6 months. And if I remember, last time we spoke was it February, right?
It
And
was.
that was before the crash. So
The crash.
the crash and what a crash it was. And so, yeah, I mean, I can't believe how quickly this year has gone, but so much has happened, right, since February. And I think, lots of things. I mean, in the markets, outside of the markets, we've had wars, tariff news, and it's just such a mess of a year, isn't it? I mean, how's it been for you guys?
I mean, the year's been personally it's been challenging, but in the market trading, it's been pretty good for me at least.
Yeah, it's been a fantastic year. That I did go into a bit of a drawdown when the tariff sell-off rolled, but I would say that it was probably the which
Right.
I don't know if
Faster
that's
than
a
COVID?
yeah, because I didn't trade the size I did during COVID as I did this year. Like I was way more comfortable and I think probably better prepared than I was during COVID. I think yeah, I don't know.
Yeah. One was like potential human extinction and the other one was freaking tariffs. So
For
I think
sure.
you have more conviction.
I mean, I think I mean, just on that point about being better prepared this time, right, it was, I mean, I think, do you think it's because everybody sort of saw it coming and that we were better, or that we knew what to expect, or what?
I don't think everybody saw it was coming. I mean, these guys were trying to convince me that I was, not doing the right thing by pulling money out.
Oh, I remember
I
that. I
don't, I
remember
don't,
saying I
I don't,
went,
I don't
yeah,
think everybody was ready for it.
okay.
I don't think that I was ready for the bottom as quickly as it came.
Uh-huh.
But just like I said when you and I talked not long after that, Cookie, like, I'm smart enough to see when the reversal's happening, and I still caught a good amount of that bottom. I didn't catch the main
Right,
peak
right,
or
right.
valley of the bottom, but I got in lower than what I sold things at, which is the whole goal, right?
Hey, what made you, if you can remember that far back, what made you think that now you're going to start buying? What was it? What was that? Was it in the charts, or was it something that was happening outside the charts that made you think now's the time you want to start buying?
Well,
Yeah.
I was actually traveling, and I think I had some Broadcom puts that I sold to open, and they absolutely got smoked, which I got assigned to them, which was great. But once that just felt like a capitulation bottom to me, and everything was oversold on the charts. And I was like, well, I
Right.
have to buy something else, right? Like,
Yeah.
and think that this is good enough because again, everything was oversold. It was one of those where everyone had the fear and the FUD. And usually when that's the case, the spidey senses start tingling, and that's when I didn't go all in with every dollar that I had available, but I
Right.
probably put, around half of what I had working with to work at that time.
Okay.
And then once the market bottomed and it was a true reversal, I mean, it took me probably, what do you say, guys, a week to 10 days before I put the rest of it to work, something like that.
Yeah, right
Um,
around
Yeah,
there.
I
so
will
I,
say
I,
somewhere around there.
I definitely made out better by selling while it was high and then buying before it, came back up to where I
Mm.
sold. So,
Mm.
yeah, no, humbly speaking, I did well.
Okay.
So I I think to answer your question, Cookie, a couple things. I think the 6100 resistance was something that a lot of people saw. No
Mhm.
one was expecting a 26% move down off that, right? I was expecting a back test to maybe 5,500 or 5,700, somewhere around there. Um, and then go again. And obviously, we came in and did a 50% retrace on that April 7th bottom. But I think the biggest part of that candle was it was a 10% candle on the Qs, right? Like this
Yeah.
is not a stock, this is an index. As soon as I see one of those, it is and it is automatic to me a bottom. I don't think that maybe I'm wrong maybe I'm wrong 1 out of 10 times, but it's worth taking that shot every single time
Yeah.
when you get a 10% candle and keep stops, right? Ultimately. And I still don't think people were as prepared for this. We might have been. We've been trading, we've been doing this for a long time. But I was talking to friends and I'm like, it's like, what are you buying? And I was like, uh, I'm buying literally. I bought Tesla. I bought Hims. I went crazy on that 4.7 for yeah 4.8 mark of April. But they
Mhm.
were like, no, we'll wait. We'll wait. Let's see what's happening. These tariffs are bad. And I'm like, no, this is it, right? Like you're not getting much more than this. If you might get a quick spike down, but other than that, you're done. This is over. So I
Right.
Well,
still don't think a lot of people were buying.
and that was my challenge, right? Because Nick said, "What do you? It's a V," and I said, "What do you mean it's a V? Like we have no confirmation that we're out of this bottom yet." And then less than a week later, I'm buying. I'm putting all my money to work. So I think for me it wasn't. I had always said I'm waiting to the end of quarter one before I do anything, and
You did. Yeah.
the timing couldn't have been better as far as that goes. But sure, I could have put more money to work earlier, but I'm not going to bitch and moan about that. I think what I really appreciated, Nick, you were you saw that igniting bar, right? And you were just convinced that this is the bottom and I'm crazy. And you were worried that I was holding out too long and not putting money to work soon enough.
I remember that show in particular, or like pretty much all of April, because everything once we had that igniting bar, I think there was a lot of uh disagreement on FinTwit whether or not people wanted to define April 9th as a follow-through day. I probably would have argued that like that was the igniting bar, but the real follow-through was like April 30th. So you really had all of April to kind of get your shit together. And when we were talking, I think I had fibs up from like 482 to the top of that igniting bar. And once we had that igniting bar, I think the lowest we got was like the 0.618.
Yep.
And that was on what was that? That was on
Just a week
on April
later, right?
21st. Yeah. And we undercut, just barely undercut the low of like that gap down day on the post igniting, but then we reclaimed it, gapped and ripped I don't actually know. I think in my mind, I just have this like from O'Neill's book and a lot of the, Juan style traders, they kind of preach like, dude, if you get a follow through day or what you want to define as a follow through day, you've got to put money to work, even if it's only like a little bit. Like you've got to just get involved. And I think that's kind of what I had really in the back of my mind was like, dude, like this is I don't know, you got to put money to work.
What
And
about you,
and
Cookie? I
if
mean,
there
we know what the three of us is doing. You've kept up with us, but we haven't
Yeah,
talked
because
to you in
I
6
wasn't with you
months.
then.
So
I
what in the
mean,
hell?
so the reason I asked, the reason I asked is because I thought this call, as opposed to being me just sharing charts and forecasts and stuff, we can talk about the psychology and the thoughts that went through our minds where we took certain decisions. And no better place to start than the April crash, right? So just to share with you what was going through our head, what was going, I was going to say our heads. I've got one, but what was going through my head at the time was, well, you mentioned COVID and stuff, and just learning from what happened back then and thinking, how can we do it better this time? You always want to try and do better.
yeah,
You always like mess up because you think, oh, this is a crash. And then you either take profits too soon, you day trade instead of buying into long-term swing positions and so on, right? So I didn't want to make those mistakes again. But if I can basically give you like two buckets of the thought process that I
yeah,
went through, and I want to go through this because we'll see it again. We'll see it again, and if what I can share now might help people, then I think that'll be a good thing. Better than sharing price levels and forecasts and stuff. Um, so let's look at it in terms of two dimensions. One is inside the charts, and one is outside the charts. Let's start with outside the charts first, right? Um, if you think about how each of the market how the market has bottomed each time we've had an important correction or bear market, right? So go back to COVID. Um, at the time when you had increasing cases, hospitalizations, death, and you had charts every day showing how many more cases there were each day, right? And at the time, as soon as the cases peaked, the market bottomed, right? Now, this is a really important point because COVID didn't end there. Just the number of cases peaked because what the market is looking for is the beginning of the end of that phase. even
yeah,
if it even if it took 6 months to get better from there, and it did, COVID probably continued for the next 6 to 9 months, maybe a year, right? But as soon as the cases peaked, the market bottomed. Okay, now if you go then to 2022 and the bear market with inflation, as soon as inflation peaked, the market started putting in a bottom, even though inflation was still 9%. Eight, then it dropped to 8 and then 7 and then 6.5. And again, it takes 6 months. We're still at 3%, right? Years later. So so that's another example of where the market looks to find a bottom when whatever the catalyst that caused that correction levels off, plateaus, as it were, right? And so then when it came to this time round, I remember thinking, so how does that, what are the parallels this time with the trade war, which is or the beginnings of a trade war? Well, you had everybody slapping tariffs on each other. The only two regions that really mattered were Europe and China. Those are the two biggest trading blocks. The rest of them are, of course, it's global nature and it seems like COVID and all the rest of it. But the only two that really mattered were Europe and China. And then at the time, you'll remember, we're going to do 90%. Now we're going to do 110%. And now we're going to do 125%. And now we're going to do 200%. And now we're going to do 250%. And it was
yeah.
just stupid. And I remember thinking at the time that the quicker we get to a point where even though the tariff story or the catalyst doesn't disappear, but it plateaus, then that's likely the bottom. And that
Yeah.
happened when they stopped ratcheting up the tariffs, because what happened at the time was as soon as you get beyond 150%, 120%, it's a de facto trade embargo. Nobody's going to sell. So the
Yeah.
Chinese guys, out of Shenzhen, they're not gonna export anything because it's just too expensive. Nobody's gonna buy it. So you reach a level where whether the tariffs were 120 or 220, it made no difference. So the
It's
effect
kind of
of that
like
is,
that kind of
go ahead.
resembles like in terms of the COVID year. It's kind of like that resembles the one more lockdown or the one more this or the one more
Right,
that. Kind of like,
right.
oh, what? Yeah, you're right. Like, what's 500% versus like
Exactly. It makes no difference.
200%?
It
Like,
makes
yeah,
no difference. And so the market begins to price in, this is the worst case scenario, and then it can only get better from there. Even if it takes a year, even if it takes 2 years, even if it takes 3 years, and we're still talking about trade deals. This all started in April. We're still
yeah.
talking about trade deals, and it's been 6 months, right? So just like inflation didn't die in the summer of 2023, COVID didn't die in March, April of 2020. Tariff story didn't die in April, but we reached plateaus in all three of them, and the market bottomed. Right. So outside of the charts, that for me was one of the learnings I brought forward from what happened with previous bottoms to see if there was any parallels this time. Right. And it coincided with the bottom because as soon as China reached 250% and the US reached 200%, they started saying, they started using words like, this is a de facto trade embargo. It doesn't matter what more tweets we send out, it's not going to get any worse. It can't get any worse, right? So then they start coming together to communicate. So for the first time, you've got Besson and his team in China, calling each other because the tweets are just stupid. It makes no difference anymore, right? So that was the beginning of a recovery phase and saw the bottom in the market. Now, so that was good. That was great insight and great thinking at the time. And then inside the charts, there's two things. The first is you think about, well, what if I'm wrong? What if I'm wrong? Meaning, what if I buy when the market has dropped 20%? What's the worst that can happen? Because if you think about previous corrections and bear markets, there's always a bear market rally. So you get to 20% or 25% down. The worst that can happen is maybe it falls another 5 or 10%, but you will get a bear market rally. And I remember thinking at the time with the traders that I'm with that so SPY went to 480. Okay, so it goes to 470, or it goes to 472 or 465. But you'll get a bear market rally, which will be better than the bull market rally because the bear market rallies are better than bull market rallies. Right. So in other words, the psychology there was buy into the market. As soon as it drops beyond a certain level, there's really little to risk. Once it's gone beyond 20% down or 23% or 25% down, you're not really risking very much. You'll get that bear market rally, even if it then continues lower after that.
Are you
Okay.
speaking to indices specifically, or are you talking individual names as
Well,
well?
mainly the indices, but then where the
Yeah.
indices
Okay.
go, the others will follow, right? You're not going to get the indices going, and then the others will eventually follow anyway. Normally it all happens pretty close together. And then the second thing was the capitulation in the VIX. Right, so those were two things that were, I think, clear signals in the charts that probably forecast better than anything else that the market was going to bottom out when it did. You know, it's very unusual for the VIX to get above 40 or 35 or 40. Once it gets above there, then again, you might see a little bit higher in the VIX, but it's not going to stay up there. VIX
Sure.
doesn't trend at 40, it spikes to 40. It never trends there. You've
Yeah,
never
so
seen a VIX trending at
that
42, 44, 45, 50, and so on. So
this felt like the most obvious and unobvious bottom to most people um on the planet, right? Like on top of all that, like definitely all the you got to take your shot when you're down to that point where you're at. Mostly all the indices were at a 50% retrace of the entire move from 2022 to 2024. 480 was the previous all-time highs, right? Like there were
right,
so many different confluences that you got to
right,
put money to work, even if it means you get stopped out 5% lower and we're gonna go lower, right? And I think the other part for me was um it was a 12% update in the queues on April 9th. That it was the second biggest day in the history of the ETF, right?
right.
Or you can say the Nasdaq Composite, they're all the same. But Nasdaq Composite is like 70 years old and we just had the second best day. You gotta have there's so many things to say yeah, I got to take some shots here, right? Whether you did it within a week or something, or even 2 weeks, but you got like maybe you didn't catch the bottom. That's okay. You didn't need to catch the bottom, but you had until May 12th when the markets finally island gapped out and broke the hell out, right? And so you had another month after we had that moment where you could have gotten long and not be stubborn.
I think
But the, but
it's difficult for people to separate their political by like their political opinions from like making money, I think. And I think that the election was kind of leading into this tariff thing. Like I honestly like I know they're two completely separate things, but the amount of like fear mongering I saw getting pumped through my feeds from COVID to Trump and like the tariffs has been like, if not more than I think than COVID was. So it was like you can have these tools in your tool belt, you know, like you let's say you were buying a retest of the, you know, the breakout above the 2022 or the 2021 high, or, you know, like you could have bought whatever your plan or technical strategy was, it could be screaming in your face. But if you're like
mm,
logging into the TV and watching this, like the world's ending again, tariffs are blowing everything up, like I just felt like the fear mongering was like out of control. And so I think that was in my opinion, probably the difficult thing for a lot of even longer term investors
mhm.
to get involved, like where we did GP, just because
Yeah,
I don't know.
I don't disagree with you, Nick. I mean, I was probably involved in some of that fear mongering too. And, I just think that it's hard to separate for people who are willing to be politically aware, let's just say,
Sure.
what the potential outcomes could be. And just like I said the whole time, like I'm comfortable making this bet that I could be wrong, right? I'm
Yeah.
comfortable to sell roughly 60% of my holdings to reinvest them later. And I think we've talked about this a lot in the past. It's okay to be wrong, right? But it's not okay to stay wrong. And once I
Yeah.
saw the reversal happening, it's like, okay, if I continue this miserable bear theory, which is easy to do, people fight the tape every day, right? Then I'm gonna be wrong too. I want to stay wrong and not just be wrong over a week's time. I might be wrong at a longer time frame, and that's what I didn't want to happen. And I think sometimes we get fortified in these positions, right? And again, you can just go on Stock Twits or X or anywhere else that you see these miserable bears, and I use that as a term because that's what they end up being, right? Like wish I had bought so and so at this price, and that price never comes back. And the whole time they're fighting, saying, "Well, I can't buy it up here because it should be down here, right?" Or
Yeah.
it's overvalued. I had a friend back when Nvidia was making the turn that he's kicking and screaming that Nvidia is already overvalued at whatever the near the lows were, and then Nvidia keeps going up, and it's a sham, right? It's crap that Nvidia is doing this. Well, here we are, almost at 200, right, from where it was then, and it sort of begets that feeling of it's going to come back to me, and by me just being set in my ways, that prices will come lower. Well, just go look at a good stock chart or go look at the S&P. Like, yeah, you do have opportunities, but for the most, it's up and to the right, and you can't really stop that.
It's hard for that when we're talking about time frame also, like I think it's difficult for you're not going to find many active traders and speculators that are able to perpetually remain in step with the market. Like when it becomes like, you know, if the market's trending and melting, you just got to sit and hold. If the volatility hits and you still have that long bias, you're buying pull-ins to like logical areas of support rather than buying the breakouts. If that's not working, are you dropping your time frame and just day trading? Are you, swing trading? It I don't think many can kind of like adjust their mind to like kind of perpetually zoom in and zoom out. So like if it's like, yeah, Ben, like you hop on Twitter X and kind of the point of like these miserable bears. If you're a swing trader, position trader, long-term investor, there's no reason that you should be taking advice or even listening to some guy day trading. You
Yeah, and
know?
for the person who has an interest in the markets, but it's not an everyday trader, right? Like I can post something on StockTwits or Twitter, and it be relevant for 5 minutes, 5 hours, 5 days. They may not know that, and I'm not always the one who always says, well, this is my time frame that I'm working with, right?
Yeah.
And they may take action on that because, oh, Ben's a bear now. Well, Ben might have been a bear for this morning, right? And that might have been my comment as opposed to, well, prices have to be lower. I'm buying puts on everything. Well, there's nuance in that in time frame, and we don't always aren't always able to provide what time frame we're thinking. But people who are just getting in the market with interest, like they hear negative things and oh my God, Nvidia was whatever price it was a month ago, and now it's this price. Well, I'm going to wait for that price that I first looked at Nvidia, and the chances are that that comes back. I mean, it's not zero, but it's pretty low, right?
Yeah.
Yeah. Yeah, let me
Cookie,
jump in
what?
here.
Yeah.
Can I just I want to just follow on from what you said, Nick, earlier about, so after the crash and everything, then the most important thing is how do you stay in the market, right? And that comes back to what you're saying about the noise, and it's the noise that's been deafening. It's been insane this year, right? The
The
noise has
noise and
been
the signal, Cookie. That's right.
right, right. So let's talk about that, and let's talk about the points that you just made regarding. Well, there's two things, right? So the guy who's buying and selling each day, he can't be doing that because of fundamentals and macro changes, because macros and fundamentals doesn't change intraday.
Right.
It changes over weeks and months and years, right? So the guy who's buying and selling intraday is doing so because of a mindset. That's one thing. And that may be flooded with all the news and the noise that we talked about earlier on the, like he switches on the TV and has heard all of that stuff. Or he's just got bad technical analysis. It's one of those two. Right. There's nothing else. So he's either got a mindset which is filled with stuff which isn't helping, or he's trading technicals which aren't giving him the best result. Right.
Or
Now,
that he
Everyone
doesn't
with bad technical
understand.
analysis.
sorry?
You're speaking to the guy that's getting chopped up, right?
Right.
Or were
Yeah,
you?
exactly.
Yeah,
Yeah.
yeah.
Well,
Okay.
but as I said, there's two. There's a guy with a mindset that says, "Oh, the valuations are too high," or the tariffs haven't. I mean, many times, but the tariffs haven't ended yet, and China still hasn't made a deal yet. And just because they've met in Geneva doesn't mean they've reached an agreement. And Europe is doing this. So there was that constant. I can't buy this market because the problem isn't fixed yet,
Hmm.
Yeah.
right? So one way to address the mindset is, if you think about what the market ultimately is doing, is it's pricing in the earnings power of the companies that we're talking about, whether it's the indices or the rest of them. So then you say, well, let's take a look at the earnings results. Right? So you look at the earnings results and they've been going up.
It
So then you
looks
say, well, okay, yeah,
phenomenal.
but exactly. So we've got 10% year-on-year growth in the S&P this year, right? In the last quarter, 10%. It's like it's not it's not even slowing down, right? It's crazy fast, right? So then you say, okay, so all of these indicators that you're using, they're not helping you much as indicators if they're not describing the results that the companies are posting, right? So you use indicators as a guide to what might happen in the future, what's currently happening. But if the companies are reporting stellar earnings, then surely that explains why the markets are going up. Because that's what markets do. That's what they're pricing in. So from April through now, you just look at the results. What are they saying on the earnings calls? What are they forecasting? There was none of this. And the CEOs, they didn't really start talking about empty ships and we're not going to have stock. We're not going to be able to do this. We're not going to be able to do that. And they're worried about the tariffs. None of that. They weren't even talking about recessions. They weren't talking about any of that. So all the scare stories that everybody had in their mind, it wasn't being repeated by the CEOs and the CFOs on the calls, right? So already there
Huh.
was something that dispels some of the fear or some of the agony that many other people were going through, right? Okay, and the reason why
Yeah.
it's important that we think because one of the things I think that I've tried to do differently this year is be far more understanding of what's going on outside of the charts because that's what gives me conviction to also because the last thing I want to do is to say the market's irrational. I hate it when people say that. It really drives me
Yeah.
crazy. People say the market's irrational. I'm saying, well, maybe the market's rational. You're just too dumb to see why.
You,
Yeah, totally.
It's
like,
it's it's a cop out.
you know what I've been seeing a lot recently is like NVIDIA is going to top us out, right? And
A
we're
lot.
gonna sell like a lot. It's deafening on how we're overvalued. This is the highest value PE crap. But the NVIDIA, like, is anyone actually looking at the NVIDIA chart? Like, does that honestly look like it's topping out? Because it does
It's been
not.
it's been flat for a year. It just started going
Yeah,
up.
and it just broke out after being flat for a year, right?
Right, right. And so that takes me to another point, another reason, to try and help people understand, because my objective here is to share why I'm fully invested in the market, why I'm still fully invested in the market. I say I'm all the F in, even now, even at 640 in the SPY and all the rest of it. I have zero fear here because I know where my flaws are. I know where if these flaws are taken out, then because I'm also taking into account the technicals, of course, right? And
Yeah.
so one of the questions that I asked on Stockters before I disappeared from there was, what's the $10 trillion question that nobody's asked, right? And nobody was able to ask the question, the question that was going through my head. I'm not surprised because my thinking was a bit warped, but the
You're gonna
question is,
take an attempt.
so you go for it. We'll have a go. What's the $10 trillion question that nobody's asking?
Um, it's a good one. I think maybe I would say what I would say is that like I think the real world impact of AI
Yeah,
is is something that people are not actually asking the question about, right? Like there's a lot that's
yeah,
going on and people are using stuff, but
right,
that S curve in technology is
right.
accelerating. So I don't know exactly the question, but anyway, I suck at this. But
So no, you're on
So
you're on the right you're on the right lines. If anybody wants to have a go for it, guys.
yeah, so I look back at this. We talked about this on the podcast. That MIT research saying that AI has not been
Delivered. Yeah,
yeah, it hasn't been delivered, and it's way more of a cost than it is reducing cost. Well, whenever you scale anything into business, there's going to be those startup costs, right? And we haven't even started seeing the outcomes of
yeah,
what's going to happen from AI and all this automation that's going to happen in our lives. We are in the top of the first inning, basically, to
yeah.
use a baseball parlance. There has been very little meaningful push for business that has shown what their investment a return on investment. There's been very
Hmm.
little of that so far, and it's going to happen. It just doesn't happen overnight.
Okay, good, excellent. I mean, you're on the right line. So here's the question, right? The question is, if AI does deliver, what's the market going to look like?
everyone's gonna be a trader because they're gonna be out of jobs.
No, 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 no,
I
no, no. I
mean,
mean,
that's
in,
like
in,
I
in
kind of
terms of levels, because sorry, just before you jump in, Nick,
yeah.
if AI delivers on the promise, the market is going to go through the roof.
Yep.
Yeah.
It's going to go. So if so, and that's the question that nobody's asked. So then
Jensen,
the follow up
sorry.
to that then uh, go for it, Nick. Go for it, Nick. I'll continue after you. Go ahead.
I was gonna say Jensen spoke to that not too long ago, and I don't remember what clip or what when it was, but that's another fear-mongering tactic. This idea of like, yeah, there are going to be jobs that come and go away. But I think if I was going to answer your question to what is the $10 trillion question, it would be what is your personal relationship with AI? Because it's so layered that like you can take it to like, you know, what I'm thinking is like the productivity level across the board is going to shoot through the fucking roof.
Right.
The your relationship with AI is your ability to input prompts that bring out the best in you. And if
Okay.
people are like, if you have this sect of or this separation of people, the people that aren't like just you're using ChatGPT for like kind of like Google shit, rather than
Yeah.
optimizing your life, like we're gonna see like I mean you're talking about like brain power and I don't know. I would say your relationship with AI is the $10 trillion question. Because
Okay.
depending on your relationship with AI is going to determine, I mean, at this point, probably the rest of your life.
Okay. So I'm gonna take the question from a slightly different angle.
Yeah.
Right. So I'm gonna take the question from purely from the markets, as in the stock market perspective. Right. So, you're talking about increased productivity through the roof. What's that going to look like? You're going to see tangible value behind that, right? So
Yeah.
that's going to be reflected. So that value is going to be held by companies.
Yes. Oh, that 100%. Like, even going to like, people want to talk about like, whatever, currency, crypto, inflation, all the
Yeah.
shit. Why wouldn't you just want to own the best businesses out there, the
Bingo.
best publicly
Bingo.
traded
Exactly.
companies,
Right. So
because you're,
so so let's say that global GDP rises from the current 5 or 6 trillion to 10 to 15 trillion dollars. That value is going to be in the market somewhere. It's going to be in the US stock market, it's going to be in the European bourses, it's going to be in the companies themselves, right? So you will see trillion-dollar companies. And so
yeah.
here's the circular argument that everybody's missing as well, right? So what would the markets look like if AI was delivering is half of the question. And then the second question is, if the companies are reflecting that today, doesn't that imply AI is doing something or there is something behind the scenes? Because it's a circular argument, right? So you are seeing $4 trillion companies like NVIDIA, and then you'll see, 3 years ago, 4 years ago, people would be surprised that the first $1 trillion company was probably Apple or Microsoft or something, right? Now nobody cares about $1 trillion companies. And just like today, everybody's, hands in the air with regards to $4 trillion companies. What happens when you get the $5 trillion company and the $10 trillion company? The point being that these companies will capture the value created through AI. And so as we see, and because that won't happen overnight, I mean, so let's continue that through to the end of the logical endpoint. We will not reach that 10 trillion in one night. It's a process that could take 1, 2, 3, 4, or 5 years. So aren't we walking that path? So when you see valuations of 2, 3, $4 trillion companies, isn't that part of answering the what does the $10 trillion world look like? I think it does, right? So in
Yeah.
other words, so basically what you're seeing is that the markets are reflecting the continued promise of AI, and as you're seeing the rollout, and we haven't, as you said, we haven't seen autonomy, we haven't seen robotics, we haven't seen new energy discoveries, we haven't seen new pharmaceuticals. That's still on the way. So, and I think once people start, hold on, let me just add one more point here, which is important, I think, as well is, in order to qualify what I'm saying as being probably true. Again, nobody really knows, right? But as being probably true. One of the questions I asked on StockTwits about 6 months ago was, does anybody expect the rebound from this tariff crash to be the same as post-COVID? I don't know if you remember seeing that question, right? So I asked that question about 6 months ago
Yes,
on
yes,
StockTwits.
yes.
And people said it can't be the same because we don't have stimulus, we don't have all these bills trying to get people to spend, we don't have all of this, checks going out to the people, all the rest of it. We don't have any of that. We don't have interest rates at zero. It will not be the same. And I went, just wait and see. And then so now, 6 months later, we have a V which is steeper than COVID without the stimulus, without the rates at zero, without the checks going through the door. So how do you reconcile that? You can't. You can't reconcile that with the same lazy arguments that that people are still using today. You can't say
Yeah.
that that the market is this. There is something fundamentally different about the market today that, and it's not just retail. It's not just retail piling into stocks. It's not just people going crazy with buying stocks. There's got to be something else, and the only way to explain it is technology and innovation, because
Yeah,
it's
Cookie.
not retail. Go ahead, go on.
I was just saying, I was a similar conversation. I was just looking, I just reposted, which is on April 8th, was just making the comment. I said, and just agreed, and just like 2020, no one sees the catalyst as to why, and then it comes. And we've moved and we're just getting the catalyst as of last Friday, right? Like this is the crazy part about this market, right? Like when you talk about that $10 trillion opportunity, is that everyone wants to short this, and we just finally got the catalyst to go higher, right? Which is the lower rates, the easier money situation, and we're already V'd out like crazy, like even more than
But
2020.
yeah, but my point there is that the market doesn't need the rate cuts to see the promise of AI in the markets, because it's
Yeah.
done it for the last 6 months without it. Now, what you're saying is an additional tailwind. Let's call it not a catalyst, but an additional tailwind that could move things even faster, especially for the low cap companies that may struggle to get loans and stuff or debt and all the rest of it, right? So it's certainly not going to be a hindrance, right? Having lower interest rates, it'll if anything, it'll speed it up.
Yeah, absolutely. Then a lot of so we talked about this on our weekly other podcast, is just that all the low cap shit companies have already been weeded out over the last 3 years, right? They're all bankrupt or merged or gone, right? They just don't exist anymore. So the businesses that do exist are the ones who've figured out how the new monetary policy, they can still exist and still function. So if the monetary policy reverts back to cheaper money, it's an ignition bar, right? Ultimately,
Yeah,
over time, it's not going to happen in five
right,
minutes or 10 minutes,
right,
but over
right,
the next 6 to 12 months, this solidifies their business on another level.
right. And then there's another thing that we're seeing, but nobody's really, well, few people are really acknowledging it. We've sort of talked about it on the call, which is this rebound has been stronger than any that we've seen in recent history, including COVID.
Yep.
Right
Yeah.
now, after COVID, there was a 2 month consolidation in the summer, which many people were expecting to see now after this rebound, which it hasn't happened. So over the last 2 months, the indices have gone largely sideways. Instead of correcting lower, they've just corrected sideways. And that's just another clue to how strong this market is in relative terms to previous recoveries. And it makes sense that it's like that, because if we now zoom out all the way to 1990 and the internet, so you've got internet, you've got cloud, you've got mobile, and you've got, and now you've got AI. It's on an exponential curve, and that is a chart that I shared with you several times on calls that we've had in the past. So we're at the business end of the parabolic move that started in 1990, right? So
Oh,
then, so so so
damn.
that al- so that also explains why the pullbacks aren't as deep, because there's just no space for them on this parabolic move higher. And if you and if you also think about what AI represents, it's probably the greatest or the biggest technological innovation since we left the caves, right? So
Yeah.
if it delivers on that, then why, again, going back to why wouldn't the market behave, if it really is life changing, wouldn't it change the markets for the period that it's developing, at least, right? It makes sense. All of
Cookie,
it just makes sense.
I love when we're aligned. I love it. When you said 1990, so the chart that I have posted on X, it's pinned to my profile, is literally the technical chart from the 1987 Black Friday crash, right? Like, so I love how when we align, it's just it feels a
And
bit
and
euphoric to be honest, but it just I love the thinking.
and I think that and the reason why we're having this part of the discussion now is because why do people not hold on to their stuff? Why are they looking to try and get out after 2 or 3%? Look, I see, and this is going to be music to holding bags ears, right? I see stocks will get into 250, right? It's at 25 now. It's at 25 today. It'll 10x, right? And it will do that in the next 2 or 3 years. It'll do that, right? And and so when we're thinking about these drawdowns that we're seeing along the way, the 1 or 2% sideways, the market going sideways for a couple of weeks and stuff, these I think are opportunities for participants who do see the bigger picture to be able to hopefully, invest in in companies which, I think this is one of those things as well where, there's such a big moat to being successful. Like those who've got the chips, those who've got the compute are the ones who are going to deliver the first services, right? So that's why I remember thinking about a year ago, follow the chips. Right, so follow the chips. So you invest in NVIDIA, then you follow the chips. Where they're going, you've got people like, of the Mag 7. Right? So you've got Mag 7, they're buying all the chips. Those are going to be the ones where the big services are going to come out from first. However, whether they do well or not is anybody's guess, but they have the capacity to deliver the services that consumers will want more than anybody else because they've got the compute. And that's why Elon Musk, despite everything everybody says about him, he has an advantage because he has more chips than anybody else. Whether he's able to deliver autonomy in cars or whether he's able to do something else, whether it's XAI or he has the chips to be able to at least have an advantage to be able to deliver the service that other people won't be able to do.
And that's where I'm with you, Cookie. I'm a big believer in just socking money away in the biggest names in the stock market because ultimately the rich get richer, right? Like
Mhm.
over the course of time, who would you rather be investing in infrastructure with? The
Mhm.
Apples of the world or some company in Shitco Summer, right? And that doesn't
Mhm.
mean that the company
Yeah.
Shitco Summer's doing bad, right? That doesn't mean that they can't compound over the course of time. But if we look at the long course of history, businesses that are publicly traded on the stock market, you're either going up or it's a zero sum game, right? They are on a race to zero. It's just when they go to zero ultimately.
Right, right. But let me just on a related, but on a related note to what you just said, but on a tangent a little bit. Trading strategies, right? Now you know that I'm more an index person, right? Indices and Mag 7, basically the leaders, right? So I only track the leaders and I only track the indices mainly, right? One of the things that I've been doing consistently for years now is rather than look for stocks, and again, there's nothing wrong with that. You talk about Shitco Summer and they've done very, very well, right? Um, you know what Sharpe ratio is, right? Right. So the Sharpe ratio gives you an idea of how volatile a stock is relative to its mean over time, basically. So how much does it deviate from its path? So for example, and I'm going to use HIMS just as an example here, no criticism to the stock because I know some of you love it, right? But so it's very volatile to its mean. So it'll go up 50, above 50%, below 50%. And even though over a year it might deliver 200%, it'll take you through the trenches, right? Now, that you have on one side, and on the other side, what you have is you can say, well, if I was to pick an index, or even SPXL or TQQQ, for example, right? So a 3 times leveraged instrument tied to the index, and I went all in on margin on that, I would deliver better returns on something with a higher Sharpe ratio and all in on margin than trying to pick names which are super volatile and they deliver so I can basically what I'm saying is I can deliver the same 100% gain using QQQ, using margin and leverage because it's easier to hold that than it is to buy some of these names which are incredibly volatile, and you may see them through to the end or you may not. Right. So,
Yeah,
and this is what the
totally.
hedge funds do. So what the hedge
Is
funds
that
do
a
is they
time frame conversation, Cook?
no, it's not. It's not.
Because
It's a
to
volatility
me,
conversation.
like if you think
No, it's
Hims
not.
is going to be this new thing, right? And it was at, well, I don't know, like 3 or 4 billion, and you think it can get to 150 billion over time. Can you replicate those same results over that same time?
Yes, you can.
Okay.
So you can replicate those results using and you can use options and futures on indices, right?
Yeah,
So you so
it's the easiest way to handle this market, right?
right.
To hedge yourself.
So the smart trade is to find high Sharpe ratio names and leverage up to the tiers because they're easier to hold and you'll see the end. You'll get to the end, right? So, and again, there's lots of ways to skin this cat. But the reason why I mentioned that as a strategy here is because if you believe in the big idea, which is AI is going to deliver the goods, then you don't want to pick the donkey in a horse race that's going to deliver $10 trillion. You don't want to take that risk. So the point being that, okay, so you buy your Mag 7s, you buy your indices, and you leverage up to your eyeballs in those. And you're more likely to profit from that than let's say picking some of these and again, whether it's I don't know, BBAI or HIMS or SoundHound or the others, right? They have certain promise for sure. And in the end, it's a balance, right? So I don't go 100% Mag 7 and the indices. I'll do 70%, let's say, on this strategy, which is find high Sharpe ratio or easier to hold and leverage up to the eyeballs. And then for the other 20, 30% of the portfolio, pick names which have strong trends and hold them during the time they have strong trends, and then just bin them after that. Because I don't want to hold something with a 40% drawdown, knowing that it might triple in 6 months' time. I'll come back to it, right? And again, the reason why I'm just describing this is I remember 3 years ago, 2 years ago, when ChatGPT came out, and I wrote some long post on StockTwits about, how AI is going to, the different phases of AI and stuff. When somebody asked me, what would you buy? Would you buy this? Would you buy that? I said, I'd buy TQQQ. Buy stocks or buy TQQQ, and then maybe buy the Mag 7. And you're done. Because you don't want to lose the profit from the idea because you pick maybe one or two bad horses along the way, right? And again, it's just food for thought. And I'm not suggesting that nobody holds any of these other names. I'm just saying there are easier ways to do some of this. There's easier ways to profit from the big idea.
Was it you that said,
No,
was
no,
it on,
definitely not.
not you? Well, when we're talking about time frame, skill, tool belt, you name it. I can't remember who said it now, but somebody had said, if you can't outperform the QQQ, TQQQ, like trading
Right.
individual
I've
names,
said
like
that. I have said
why
that.
that was you.
I have said that. I don't know if it was to you
Oh,
guys, but I have said
okay.
that. Yeah. Yeah.
It rang so true in my ears, but I was like, dude, that's the fucking truest thing I think I've ever heard because I mean, I'm always pulling money out of my active accounts, but it's always getting redeployed into like various shit that I DCA in, which
But
is just basically
but
indices.
the compromise here is you can still scale in and out depending on trend strength on the QQQ, right? So it's
You,
not buy and hold forever. So I'll trade it like a madman, right? But I will trade it the bare minimum so that I'm out when the trends weaken and I'm back in up to my eyeballs when the trends strengthen again, right? Um, and yeah, I mean, it's been a good year. Let's put it that way. It's been a very, very good year. And I'm thankful for the crash that we had in April and all the rest of it. But it's been fun. And again, the reason why I wanted to have this discussion is uh, on StockTwits, I'd have lots of interactions with people and they say, oh, so where's Tesla going to get to? And where's all this going to, where are these names going to get? What would be the buy point? What's your target? And I think that if people's mindsets, if they have a healthier mindset approaching the market, then a lot of these questions become like low down in the hierarchy. It doesn't matter whether you buy Tesla at 330 or 320. It doesn't make any difference if you think it's going to get to 500. It makes no difference. If you're on the AI train and you think it's going to be a $10 trillion opportunity, then it doesn't matter whether you buy at this price or that price, right? It really doesn't make a lot of difference. So long as you have that mindset where you think the world is evolving along road AI, and for the next 3 to 5 years, it's going to feed the markets like crazy. right? I
So
mean,
how does that correlate to your earlier statement around I can't handle 40% with drawdowns, right?
well,
Because to
I
me,
don't hold. Yeah, go ahead.
yeah, so to me, it had a 40% drawdown. Like literally after it went from 488 to 214, right? And if you bought at 330, you still had nearly a 40% drawdown from there. So it's a mega cap, yet it still behaves like a small cap at a lot of times. So like how does that, if you think it's going there, how does that correlate with the conversation of I don't hold things that are
That's where it still has to deliver on the technicals, right? Meaning that
okay?
if there's a bearish trend in Tesla, just because I think AI is going to deliver $10 trillion, I won't hold Tesla until
So
it performs. So
do you
until it
have
shows.
any long positions like that you've held for years, or are you constantly swing trading depending on
Oh,
technicals?
the longest positions I hold are all linked to the indices.
Okay.
Everything else is weeks, months, maybe a year, maybe longer than that, right? But even let's take a name like NVIDIA, which had a stellar run for 2 years, right? I would scale in and out along the way, even though it went up by a crazy amount, even though it went up by a crazy amount, because I've got these pivots and I've got this understanding of trend, right? So even there, I'll scale in and scale out. And even names like Soxel and certainly the names like the 2x and the 3x leveraged ones, I'll definitely scale in and scale out, depending on how
Those make
strong and weak
sense.
the
They're
trend is,
naturally decaying, so
right?
that
And
makes
they'll,
sense.
so I'll definitely scale in and out of those. So anyway, what do you guys think?
Yeah, I mean, when we're talking about mindset, um, you gotta, in my opinion, like you gotta start like shitting optimism, honestly. Like, stop playing victim as if like the market is doing something to you rather than like for you. If you start looking at like every day as an opportunity and there's opportunities out there, you stop really giving a shit whether it's to the upside or downside on the short term or near term.
Mhm.
On the longer term time frame, if everything is an opportunity, like get the fucking we're going to zero kind of garbage out of your mind. Or like the word like everything on a long enough time frame is a buy opportunity and an opportunity, especially when we're talking about the indices versus like the individual names. But I don't know, man. I think segregation of I was gonna actually where I was going with that was I think segregation of capital would benefit a lot of people and a lot
Mhm.
of traders, investors out there, and really sticking to the idea that if you're going to segregate your capital, um, and divide these accounts up based on either time frame or strategy, you got to stick to it because like let's say you have like a lotto account where you're just like, dude, I'm gonna use this account that's I'll throw 100 grand in it and it's just straight fucking shitco summer. I'm I am it's just straight momentum. You've got to tell yourself like if I blow this account, well, I'm done with it. Versus like you have your DCA account or your Roth or something like something else. The reason I kind of mentioned that is because I've found that segregating my capital allows me to scratch the various itches when they come and has prevented a lot of mistakes in each account being that it's segregated. It's like I'm not making Momo decisions in my trend account versus like a concentrated momentum account because like that's just
Right.
that doesn't make sense. It's
Makes
deviating
sense.
from your strategy, but um
Nick, I
I
love that. I just tweeted that. What you just said with stop playing the victim like the market's doing something to you, everything's an opportunity. That's the miserable bear theory, right? Is you're victimized, and maybe I should instead of call it miserable bear, maybe I should call it victimized bear, right? Because I think that's exactly right. If the market turns on them and is going higher, the market. No, it was poor timing, right? It's an opportunity to fix your error and get long as opposed to trying to short the market. On the other hand, right? Um, I think that the victimization is a perfect way to sort of rationalize it because it's oh, I should have bought it here and I didn't, and it's going to come back to it, and then the market never does. Oh, you fucking market! It's so rigged, right, Cookie? And I know you
Yeah.
love the rigged part of it.
Yeah, I love it. I want to change it. Hey, but just on that point, right? What I would say to somebody who thinks they've missed the move, right? And that's such a big it's such a big issue. Like, so you miss a 2% day in the markets, and you think that's it, you're done, and you start crying, oh, I've got to short it because I missed the move, right? Now, one of the things that we tried to do a lot this year was to visualize what the trip is, because you may have missed a 2% move, but you haven't missed anything yet. And so the
No.
reason why many people decide to jump on the short is because they think that's the next thing to happen in the markets. The market's going to go down. But if they start off with a bigger with an approach which is what does like again this $10 trillion opportunity look like, then it's you may not have got the best entry, but you're still going directionally correct. And
Yeah.
so as long as you're directionally correct, who gives a fuck whether you
Fuck.
got 2-3% higher or lower?
100%. I couldn't agree on that anymore. When you were speaking, I kept thinking, actually, Ben, you too, I kept thinking about, the millennial generation, primarily living through 2008. Because a lot of the reading that I'd been doing, or just kind of like, I don't know why maybe because I am a millennial, but I'd been seeing a lot of like millennial shit about people still sitting on the sidelines, getting blown out in 2008, not getting involved because of 2008 and all the things. And it's like, dude, are you trying to get like rich as fuck and free, or are you just wanting to like compete with people on like the internet about, getting this name first or getting this direction? Because if as long as you nail the direction, the dominant trend,
Hmm.
like 69% of your freaking mistakes are going to be forgiven.
Yeah.
And then obviously, again, we go back to shitting optimism. Like, again, you zoom out long or far enough, and it's up and to the right. Like, we're not like if you look at a chart of the S&P 500, this is a chart of human evolution. We're not like getting dumber. We're not
Well, some
going
of us
backwards.
maybe.
All right, fine, fair. But we're not going backwards. We're I don't know. I was gonna go on a whole tirade, but
No, I mean, Nick, I think that's spot on. I actually talked to a guy this morning, and he asked me when I got involved in investing, and I told him, and he's like, "Yeah, I started in 2019, right before COVID hit, and I lost everything." And I
no.
was like, "What? Why did you lose everything? The market bounced back." And what were you buying? And he goes, I don't know. I just put money in the market and it went down and I just sold it. And I was like, well, that's the exact wrong time to sell it, right? And I was like, had you looked at it as opportunity,
Right.
then you could have been layering in those buys to more made back. Now I understand. We didn't go into what his how much money he had going or how much money he had available at the time. I mean, that's all circumstantial, right? But at the same time, there were a lot of people who he has been out of the market basically since losing his money in
Uh,
2020. And he just had a negative connotation about everything in the market. And that's why I was trying to explain to him, the market is going to go up and down, and there are going to be some scary moves. But and I pulled up the chart of the S&P 500. I was like, look, over the course of time, it goes this way. That means if you had bought anywhere back here, these are the percent gains that you would have had if you just stuck it in the S&P 500. And I don't know that I want him back over, but at the same time, like I feel like there's a lot of people who, again, novice, young investors, and I don't mean young as far as, age wise. I mean young as in how much they have traded. There's a lot of people and I fell for all these traps when I first started out, is when, things don't go your way, you either dig yourself a hole or you let it go to zero, right? And dig yourself a hole, you probably add in as on a losing investment and throwing good money after bad, as opposed to just finding these constant compounders. And Cookie, I looked up some Sharp ratio numbers. It's no wonder that I feel as good about my portfolio as I do, because there's a lot of those Sharp numbers in there
Right.
for my
They're high.
portfolio, right? And
Right.
two of my latest buys, Broadcom and Palo Alto, like they're right up the top. And
Excellent.
once you find these companies who have this consistent track record, if
See, this
nothing's
is
broken with the
let me,
business, it's going to
let me
keep
just jump in.
doing what it does.
So let me jump in then. So it's better for you to margin up on those with high Sharp ratios than to diversify amongst names which have lower Sharp ratios and give you more headache. Right. So I'm a believer in that you don't need to have a diversified portfolio. You just need 4 or 5 names, right? And they're solid names, and you go all in on those. If they don't perform, you kick them
Yeah.
out. Right. Hey, let me just touch on one thing that you guys said before I forget, right? Which is about visualizing success. And again, it goes back to why people don't invest today, because I think they've missed it, right? Why am I still all in on NVIDIA? Why am I still all in on chips, right? And because of course this started a couple of years ago already, right? So you think, oh my God, NVIDIA's at pre-split 1,800. 1,900 is crazy expensive. I'm not going to be buying that now, right? So one of the arguments that I've used, and again, this is something you never really hear about, nobody really talks about it, is if in the last 2 years it was the Mag 7 that was buying all the chips, who's going to be buying the chips in the future? Right? So if they've bought all the chips they need, who's going to be buying the chips in the future? And the answer to that is, do you know what the answer is? Who's going to be buying the chips?
The Mag 7, because those
Well,
chips are going to need replaced eventually.
well, yeah, okay, yeah, I'll give you that. But what else? Who else? Who else is going to be buying the chips?
The governments.
All,
Yes.
all,
Okay, so
all the mid caps too.
no, it's going to be the government. So here's what's going to happen, right? Mag 7 will be replaced by G20. Right now, what I mean by that is, if you read in the papers recently, right, what happened is the UK had discussions with OpenAI to offer ChatGPT for free to all UK citizens. Okay, now that's just a glimpse of the type of discussions that governments are having with AI in order to not fall behind. So let's just discuss this, right? So what you'll find then is governments will want data centers because they won't want their citizens' data sitting in Texas because of everything related to privacy and all their other stuff. So when it comes to AI, they'll want their own data centers, and you're seeing around, you're seeing lots of data centers being created for governments now, not just for the Mag 7. Right. Those are going to be the ones and who are going to start buying the chips. So the Mag 7 will continue replacing and buying and upgrading all the rest of it. But then you'll see G20 as a buyer of chips in order to have infrastructure in each of their own countries. That's going to happen. And so then some people say, yeah, but what about Huawei? What about these Chinese chips which are so cheap? And to that, there's a great response to that, which is, well, if the governments didn't trust Huawei for what was it, 5G, do you think they're going to trust them with AI chips? Do you remember all the? Do you remember all
No,
the?
hell
Do you
no.
remember? Do you remember all the noise around antennas and 5G antennas, and we're not going to let Huawei do
It's
this?
the
And
new arms race, Cookie. It's the new arms
exactly.
race.
Exactly. So what you have then is you have reputable suppliers like NVIDIA who have a cornered market because nobody else is going to be able to supply those chips. So then we go beyond the Mag 7 and we start looking at countries which are going to start developing their own local infrastructure to be able to do, just like the 5G antennas. So you've got 5G antennas in 2020, 2018 to 2022, however many years ago it was, and that's going to then become AI data centers. And they're going to be spending billions upon billions on this. Now, and that's why Jensen is doing all of his tours around the world and is meeting government. He's not meeting companies, he's meeting governments. And he's not doing that for the free dinners. Right. So this is why I say that this idea of $10 trillion, if not $20 trillion, will have repercussions in the companies in the US stock market, in US tech, for years to come. And that's when and then we go back to, again, you've not missed anything. You might get consolidations and you might get corrections, and they're going to be worth your while. I would buy into those because if you're thinking about what's going to, fund your retirement 5 years, 10 years from now, it's going to be innovation and tech. Right. So I mean, it's just I mean, I just love what's going on, and it's fascinating stuff. And I'm just happy to be a part of it. I wish I was 10 years younger, or go, 10 years younger. So maybe it doesn't matter because AI will allow us to live a little bit longer anyway. But we'll see.
I love my age. I think the one thing I wish is that I looked at money like the younger generation does, in the sense that it's like, I mean, it's so fictitious and not even like real. It's just all made up. Even the idea of like talking about like the amount of commas, it's all relative. Like the only
Yeah.
reason 1 billion sounds or 1 trillion sounds like it's such an astronomical big number is because like your brain is used to talking about hundreds or thousands.
Mhm.
You know what I'm saying?
Yeah,
So
yeah,
it's
yeah.
yeah, dude, I'm with you.
Hey, in 2017, Binance launched, and in their first year, they made $1 billion in profit, not in revenues. In their first 9 months, they made $1 billion in profit, right? And at the time, if you were a unicorn with a $1 billion valuation, you were like something special, right? And at that time, I remember thinking, wow, this is going to speed up so quickly, so fast, and so it's going to, I called it exponential innovation. So you had companies which were barely a year old making $1 billion in profit. And so now, 7 years later, you've got companies valued at 4 trillion. It doesn't surprise me in the slightest. We're going to continue along that. So you'll have $10 trillion companies, $15 trillion companies.
Yeah.
So people shouldn't, and that's why I keep saying people shouldn't be worried about valuations. When markets correct and you get bear markets, valuations may be high, but it wasn't because of the valuation that you had the bear market. It's because of something else that was going on in the world. There happened to be high valuation, but it wasn't because of the valuation that you had the bear markets. Maybe it was inflation, or maybe there was a war, or maybe there was COVID, or maybe there was something, but it wasn't because the valuations were high that the companies fell. Right. And I think that, and that's why I've never used valuation as a metric to time markets. It's a waste of time. It makes no sense, right? So you buy and sell based on, I don't know, trend, for example, right? Or company profits. Company profits plateau, stock market plateaus and falls, right? So I mean, if you look at the previous bear market, EPS started plateauing and falling. That's a great, and that's what I said before. Look at company results. If the company results are strong, I've got no worries. Even if inflation is a little bit high, if we eventually see indicators reflecting in companies' profits and their outlooks, then sure, then it's important. Otherwise, until then, it's just, you got to trade what the companies are telling you. I don't know. You can tell them I'm quite bullish, but
GP, you've been quiet.
Just listening. I can't disagree with a lot of you know how a lot of people were talking about that they were born in the Buffett era because they would be just as rich as Buffett. I'm like, most likely you never would have bought Coca-Cola. You would have bought some uh oil shitco back then and be a miserable bear still. But the reality is that if AI ends up being what's promised, and I don't mean the next year or so, that you have an opportunity to create that type of wealth for yourself in that time frame, right? And that's the great metric there is like we may have crashes, we may have stuff, right? Like Buffett is known for holding. He's held through so much over time, but that's it's part of the game. It's having cash, so stack your wins, stack your job cash, and deploy money into it. I did this math a while ago, and I just saw someone talk about it again. Is if you had bought a house in 2009, or if you bought the S&P, you would have outperformed the S&P by million. I mean, being invested in the S&P, you would have been outperformed by the millions, right? It's nuts, or the Qs or whatever it is. So I love the thought process in general. I think it's good to always take a moment and step back and do multi-time frame alignment, right? And
Hmm.
um, that's that's the charting techniques I use. Does it align on a quarter, on a yearly, quarterly, monthly, weekly, daily, 4 hour, 2 hour, 1 hour? And if all those are aligned, you have one of the best opportunities to get long, right? Or short, right? Whatever floats your boat. But when you have that level of confluences, you just got like stop being scared, I guess is my number one thing, right? Like these things, the market is designed to go up and to the right. That's what it's designed to do. Will there be moments where you'll question it? Sure. Lighten up, lighten down, whatever, but be invested.
It's not how what's the saying for Fisher investment? It's not timing the market, it's time in the market.
In the market.
Yeah. Right. And there are some products out there that suck, right? Like I will you got to just pick the right products and stuff too. But identifying companies is it's a hard task, right? Think about all the top 10 companies back in the 1980s. Most of them are not top 10 anymore or barely around. I think Exxon was top 10 for what, a better part of 20 years,
Mm.
right? So in DCA into the index, use futures to hedge and trade around. And yeah, there's a we've talked about it many times, Cookie, even with you. We're in the S curve, and we're at the acceleration point of that S curve, right? And it like the thing that people don't realize is inflation, the FOMC, Jackson Hole speech, all these things are good for valuations. Inflation creates better earnings, which is why earnings are through the roof, right? And have been for a while. And so I love the thought process.
Cookie, you said something earlier, and I don't know, it just resonated with me about how to just pile into 4 or 5 names. And I think that's something that uh, I see GP smirking over there. It's kind of the book, The Art of Execution, that GP put me on a couple years ago now. And I think, for folks who are just learning trading, it's easy to go all in one on one stock, but it's hard to pick 4 or 5 names versus over diversification, for lack of a better term. And I really think that's one thing that I wish I had known earlier was, if you only find one or two out of those 4 or 5 that go parabolic or just continue to compound over years and years, and you were able to uh, cut your losses on any of the other ones, you're so you're so exponentially better off
Mhm.
from a portfolio standpoint than just all of a sudden trying to make your own QQQ or S&P 500 with so many different stocks and small positions.
Yeah.
If you
Or
if you
just
want to play the indexes, buy the indexes, basically.
or even use QQQ or TQQQ as your default option for when your stock du jour stops performing. So okay, I'm going to take my funds out of there and I'm going to leave them back in QQQ until I find something else that performs better than that,
Yep.
right? So rather than having it as cash, you're invested in something that's quite solid. I mean, TQQQ and SOXL are the only two leading ETFs that have ever had stock splits, right? So we can talk about decay and ETFs going to zero, but those two have had stock splits or ETF splits, whatever you want to say, right? So they've had like 3-to-1 splits, 2-to-1 splits. several times over the last 10 years because they keep going up. They don't do like with UVXY and the others, right? I mean, there might be others out there, but those are the two biggest, of the biggest ones, they've had splits.
Yep.
It's crazy because everybody thinks, oh, you can't hold these for long term because of the decay, but you can. You just got to, again, you can scale in and scale out when the trends weaken. That's what I do. So,
Oh, I mean, we were talking about, Independence or Liberation Day or whatever Tariff Day was. I
yeah,
mean, I just was scooping up as much Soxel in below $10 as I could, right? Because at the end of the day, you're buying the picks and shovels when you're buying semiconductors.
right. Yeah, good stuff. Well, hey guys, I don't want to keep you from
Yeah,
your lunch. It's
well,
probably dinner time there now. I don't
Cookie,
know.
thanks so much for jumping on. We missed you. I mean, I know this wasn't our normal call, but it's always great to just chop it up with you. It's always great to, have the three of us talking about bigger things than just looking at charts like we always do. So I really appreciate it. I hope the viewers
Yeah.
appreciate it. Nick GP, anything from you guys?
Yeah, no, love it. I really appreciate your time, Cookie. Every time you come on.
Yeah,
Hey,
love it,
my
Cookie.
pleasure always.
Honestly, thanks for stepping in and talking about the things that are higher level, bigger picture. I think a lot of people miss that a lot of times, but we cannot let this go another 6 months, right? I know we're a bit of a transition, so let's get something on the schedule again shortly.
Yeah, Cookie, we'll get on. We'll figure that out offline. I know we normally do
Yeah,
our quarterly cookie, but we'll leave that up to you, and we'll do it right here on YouTube.
That's good,
So
man.
we can chat about that offline. But hey, for everybody who wants to stick around for tomorrow, don't forget we have our community rip live on StockTwits, on X, on YouTube. It's everywhere. We love doing that every 2 p.m. Eastern on Wednesdays. So without further ado, we will see you then.